Hi everyone, Crypto Vatsik here. Thanks for joining. If you like this content, I would really appreciate it if you liked and subscribed to the channel. Nothing of what you're about to see is considered financial advice. These are my opinions only. Okay, so for this video, I'm going to teach you how to understand, analyze, and trade moving averages. I'm going to assume already that you have a basic understanding of what they are and sort of how to use them, as there's just so much info online these days that anyone can Google something and understand it pretty quickly. How I'm going to set myself above those videos or those other people online teaching you this is to start off by assuming you have a decent understanding already and you're looking for a bit more of an edge if you're trading or using moving averages already, okay? So what I've done is essentially done the homework for you. I've watched countless videos of MA tutorials, trading setups, blogs, Investopedia classes, you name it, hours and hours of this stuff that I collect the main points from each video or each training material, and I want to combine it into this short video. And moving averages are pretty simple in nature. There's not going to be some secret that's going to make you 100% profitable. There's definitely some aspects, though, of all these videos that they cover that are really good, maybe one or two things that they cover where they miss some of the other key things that other videos might catch. And so that's where I want to combine them all into this brief video for you. And it's not meant to be a long tutorial, hour-long video. People are busy, they have short attention spans, they want me to get right to the point. I'm the same way. So I'm going to combine these learnings that I've researched, into also the 6 years of experience that I have, just years of failing, succeeding, trial and error, researching, ultimately just observing something over a long period of time with a million different scenarios that help you kind of inherently understand a particular indicator or just something over time. So with that said, let's get into it. A moving average tracks the average price, okay, of an asset over time by using the price candle closes over a certain amount of days or weeks, etc. So they can be great indicators where bigger institutional players are getting involved in an asset, especially when we're talking higher time frames, such as the 50-day EMA as an example. And this EMA is your all-around functional EMA. It gives you a bit of the best of both worlds, meaning it reacts with a decent decent rate to price action, all the while it does aim to cut out the noise or random fluctuations in price. So here's a legend you see with the EMA that I'm talking about, the functional all around 50 purple line there. So there are different types of moving averages, called simple or weighted moving averages as well, which can be good for their purpose, but they're usually meant for more of a specific type of trading or, more of a macro environment where you don't want the EMA or MA to react too much to changes in price. Whereas traders, tend to, intraday traders definitely want to be quick on their feet and have decent reacting EMAs to identify trend reversals, news events, change in market sentiment, etc. So using exponential or weighted moving averages allows you to stay quicker on your feet, in my opinion, updated in price movements and understanding trends and market structure. So for this video, we're going to stick to EMAs, exponential moving averages. And so what are some of the benefits of these? So I just mapped it out here just really quick before we get into it. Pros, they smooth out the noise. They allow you to identify trend direction. They give you support and resistance areas. They're not truly support and resistance areas since they're averaging out past price before in the past, but they do still act as support and resistances areas. They allow you to see breaks and trends. Some cons, they're inherently lagging. They can be used incorrectly as true SRs. It's not a guarantee. They can break through, right? And they don't react to sudden change. So just some of the things that I've summarized here. But with that said, let's get more into it. So it's good to have, say, kind of a favorite EMA or your go-to EMA. And so what I mean by that is I tend to use the 50 exponential moving averages. Is it it follows price pretty nicely that I like to use, and it's good to have your go-to, but it's also beneficial to understand how it interacts with other EMAs and gives you more visibility on price action when you display some of the lower and higher time frame averages as well, such as the 200 and 100 EMAs. So we'll just get those back on there for now, but a shorter time frame EMA like the 20, which we see in the blue here, is going to read into price action a bit more and be bounced around and kind of beaten up over the rapid movements, whereas a higher time frame EMA will be less phased by the fluctuations and follow the general direction. When I say higher time frame EMA, I'm talking 100 and 200. So we're talking the light gray line here and then the darker gray line here. Okay, general direction without really cutting out the noise. Okay, so that's what I mean by that. But first off, so we're just going to get into three areas here of trading these. So first is going to be identifying a trend. Second is just going to be simple support and resistance, and then third is going to be a break of a trend. Okay, so identifying a trend is pretty simple. Anyone can do it, and basically you want to first off pick a time frame. So we're on the weekly here. Okay, it's important to understand which time frame you want to be trading on. If you zoom into the hourlies, it's going to be more difficult to identify them. So you want to zoom out to see what's going on. Above the moving averages, just being above the moving averages is not considered a trend. Okay, you want to see a consistent move in a steady and stable direction, while limiting your interaction with the EMA and definitely not going below it. That's a good sign of a trend, especially a strong trend. Okay, so here we're above all the moving averages. We're even above the 20-day moving average. We come back down, tested as support. Okay, this is definitely clearly an uptrend. Okay, and then same for the vice versa. Clearly a downtrend. We're starting to break these moving averages, coming below them and respecting them as resistance. Okay, so when you see these fanning out here, it's a significant move. Okay, it's a really strong trend. Okay, so when you see the gap get more distant between price and the 200-day or the 100 or even all of the moving averages, when you see this gap increase, super strong move. Okay, when you see the gap kind of, you're kind of ranging around in here and starting to come down, it's less of a significant move. Okay, so the fanning out was the one thing I want to talk about, and then identifying a range. So when you're kind of ranging in a price here, this isn't really a trend. Okay, so you're up, down, support, resistance. This isn't really a trend. Okay, so this is kind of just your ranging pattern. And yeah, you say the moving averages on the weekly here are above the 200-day, so it's bullish, right? But essentially, you are just ranging. Okay, and there's lots of interactions in here that you can see as support and resistances. So we'll get into number 2 there. So they act as support and resistance. It's important to remember they are simply the average of price candle closes over a period of time in the past. They don't predict the future price. Okay, so we see here, okay, we're above them, so they should be acting as support. Broke through the 20, came back down to the 50, support. Found support, came back up, broke back down to broke through support, down to the next area of support, which is the 100 EMA, and we saw very clearly that it was support. Okay, came back up, and then of course smashed through all of them on this big ugly COVID crash candle, and quickly recovered, but then became support again. So there's areas in here too where there are resistance. We'll come down to the daily. I'll just grab it one sec. Okay, so lots of interaction here. So we came back down below it. It's now resistance. Just choppy price action, but then came back up here to the 100, 200 EMA as resistance, smashed through it, support, now retest, came back up, support again, okay, support failed, came back down, came back up, resistance, smashed through it, back test as support. We're referencing the 200-day EMA here, and then now you see it nicely reacting with the 100 EMA here as support, and then you get that big fan out again, right? Big strong move. You see them fan out, and the distance between the higher time frame EMA is larger now at this point. Okay, so it's very, very strong move after this choppy kind of ranging area. Okay, so now we're going to get into a break of trend. So what we're going to do here is we're going to pull up the previous bear market. We're going to go to the day here, daily. The classic 2018 bear market is what I'm going to pull up here. Okay, so we all know this one, but it is a great example, okay, of a break in trend. And so a break in trend is in my opinion more than one candle close on a higher time frame, more than one candle close above or below the EMA. So if you zoom in on lower time frames, you might see candle closes above the EMAs on all of these. But that's if you're trading more intraday. But I like to zoom out, see what's going on, and you might say, okay, so we closed above the 20-day EMA here, so it's trend reversal. Okay, it came back down. Oh, it's kind of acting as support. Well, it wasn't a trend reversal. It was a fake out. Okay, and so just because you had candle close above it, You had multiples here, but it was really only closing above the 20-day. So that's why, again, I go back to using the 50. Okay. Using the 50, couldn't close above it. Resistance, couldn't close above it. Okay. Where did we see a close above? Well, right here, smashed through it, multiple closes above, came back down, tested as support. So the first indication is that we had multiple levels of candles here closing above the 50 EMA. Okay, so that's the first really important thing. And so secondly, when you start to look at the higher time frames, okay, we'll see, okay, so maybe the trend reversal really started here, but then we start tapering off here as resistance on the 100-day, and then finally actually broke above right on this candle right here, was able to break above it, and now it's setting that new base above it as support and got that significant strength needed to finally break through, even through the 200-day EMA here. Okay, so this is definitely a strong move, and then you say, wow, okay, so this is a real reversal in trend. Okay, and so we've closed above it, multiple candle closes again here, okay, above it. Really nice move here. Okay, so that could be one confirmation to a trend reversal. And the other thing that I'll really point out that I want you to understand as well is my final confirmation to a trend reversal is where all of the EMAs not just fan out like this. Okay, that might be a little late, but this was just such a strong move. They just started fanning out right away and gaining that distance between the EMAs. But basically the crossover of the lower time frame EMAs on the 200-day EMA here. Okay, so you saw the 100 cross right here on May 13th. That's my final confirmation of a trend reversal. You might say, well, Vatsik, the price is already, friggin' way up here. It's too late, kind of thing. Again, this is macro speaking. Okay, so this is over time. That this cross here is an indication that this is going to be a strong move over time on the macro scale, and it was. Okay, so this is my second area of confirmation. This would be the first, but it's not to say you couldn't have zoomed in on the lower time frame in here, and let's do it. We'll go to the 4-hour. Let me just pull it up one sec. Okay, so we got the same time frame here pulled up. Sorry, same basically area that I was talking about, same time frame, but just on the 4-hour. And so we saw lots of interaction with the EMAs here. Okay, and a bit of a fake out here, right? So you would have said on lower time frame, oh, okay, we came up. Oh, look, we closed above, creating a base, 4-hour. But on the daily, it did not close above these EMAs. Definitely did not. Okay, so it's definitely a fake out here. Came back down. That's why you always want to zoom out on higher time frame, in my opinion, if you're swing trading or looking at any kind of macro scale. But intraday, yeah, you could have played this one. You could have come in on the 4-hour and said, I want to find this reversal before everybody else. Okay, so when is that reversal? So you see it. Okay, so you saw this final break up above, but where did you see the moving averages fully cross? Right here. Okay, we didn't see them cross anywhere beforehand. They were well below on the end of the bear market here when we bottomed, and we actually finally got the significant cross and consistent steady move above, okay, above the 200-day EMA. And not just price, of course we need price to be, but the other EMAs, the other three, the 20, the 50, and the 100, consistent, steady above. Okay, and so that gave us this period right here of consolidation, gave us the strength of this next move. Okay, where they fanned out, strong reversal trend, and then this is where that confirmation on the higher time frame, that candle smashed through the 200-day EMA. Okay, so that was that first break. And then I think later on, my second confirmation that I was talking about happened somewhere over here. Okay, but you can see on the lower time frame, you can zoom in and probably get a bit ahead of it if you really wanted to, and say, okay, this is a point where it's building up strength, and I think this is gonna be trend reversal, good risk to reward, clear invalidation. You could have made an entry, and then on the higher time frame, you would have been set really well. Okay. So like anything else, moving averages can tie in nicely with your overall analysis. It should augment your trading tools or your indicators. Don't rely on just one. Don't rely on too many. It's good to have that situational awareness and further your understanding of TA. Okay, so hopefully you guys enjoyed this video. Thank you so much for joining. If you did, please like and subscribe, and we'll see you on the next one. Thanks. Bye.